In this video, we briefly discuss the important points or topics that we should know related to corporate law in the UAE. My dear friends, welcome to this channel. My name is jobyantony. Let's jump into the topics right away. As we all know, corporate law in the UAE is effective from 1st June 2023. It applies to entities or juridical persons that are incorporated in the UAE, such as limited liability company, public or private joint stock companies, free zone companies, etc. Foreign companies that are managed and controlled in the UAE or have a permanent establishment in the UAE, non-resident persons deriving state-sourced income or entities that have a nexus in the UAE, and natural persons conducting business activities in the UAE with a turnover exceeding 1 million dirham. They are subject to the corporate tax and are known as taxable persons. Natural persons who conduct business or business activities in the UAE, such as sole establishments, civil entities, etc., whose turnover less than 1 million dirham in a calendar year, and exempt persons are not required to register now as per the corporate law. Here are the timelines given for corporate tax registration. It is based on their license issuance date. Entities who have license issuance date in January or February are required to submit their corporate tax registration on or before 31st May 2024. Newly incorporated entities are required to submit their application within 3 months from their incorporation date. If a juridical person possesses more than one license, the earliest license issuance date will be considered as the timeline for corporate tax registration. And a natural person conducting business activities in the UAE and the turnover exceeds 1 million dirham in a calendar year must submit their application by 31st March of the subsequent year. Exempt persons are exempted from corporate tax subject to certain conditions. Government entities, government-controlled entities that do not conduct any business or business activities under a license issued by the licensing authority, businesses engaged in the extraction of UAE natural resources, qualifying investment funds, pension funds that are approved by the tax authority, qualifying public benefit entities that are established exclusively for activities such as religious, charitable, scientific, artistic, humanitarian, educational or similar other purposes are considered exempted category. Please refer the list of establishment or entities that are approved by the authority which comes under qualifying public benefit entities. As we all know, personal income such as income from salary, income from employment, income from investments, income from rental properties or real estate incomes that do not require a license from the licensing authority are not subject to the corporate law. And when we look at the tax rate, it is levied at a 0% rate for taxable income up to and including 375,000. And the taxable income exceeding the amount 375,000, it is levied at 9% rate. However, small business units having revenue less than 3 million in a financial year are exempted at present from making any payment to the authority until the financial year ending on 31st December 2026. But it is not applicable to a member of a multinational group or a qualifying free zone. Qualifying free zone persons are subject to 0% tax rate for their qualifying income that meets the conditions. Taxable income other than the qualifying income will be subject to 9% tax rate without any threshold limit. Regarding the due dates, taxable persons are liable to submit the return and make the payments within 9 months from their financial year ending date. For example, companies whose financial year starts on 1st July 2023 and ends on 30th June 2024 are liable to submit the return and make the payments on or before 31st March 2025. Likewise, companies who follow the calendar year same as the financial year, which ends on 31st December 2024, are liable to submit the return and make the payments on or before 30th September 2025. Now shortly we will talk about certain incomes that are exempted and expenditures that are restricted while arriving at the taxable income from the business's net profit. Dividends and other profit distribution from the UAE incorporated entities or from a foreign juridical persons towards participating interest in a foreign company, income from capital gain, foreign exchange gains or losses, impairment gains or losses towards participating interest, income earned by a non-resident from the leasing of aircraft or ships in international transportation, etc., that met the conditions are considered as exempt income. And coming to expenditures or losses not connected with the businesses, expenditures towards exempt income, capital expenditures, donations or gifts made to other than qualifying public benefit entities, fines or penalties awarded as a compensation for damage or breach of contract, bribes, etc. are considered as non-deductible expenses and to be reversed while arriving at the taxable income. When we look at the entertainment expenses, it's allowed a 50% deduction and the remaining 50% is non-deductible as per the corporate tax. And if we see the interest expenditures, it's limited to 12 million during a tax period and the remaining amounts, if any, it can be adjusted in the upcoming tax periods as per the conditions. When we look into the accounting method and the audit, the financial statements of taxable persons should be in accordance with international financial reporting standards. Taxable persons exceeding revenue 50 million dirham during a relevant tax period and qualifying free zone persons are expected to have their audited financial statements. That's all for now. Thank you for watching. See you next time.